Hey everyone, it is Steve Stump. Insure Me Steve. I'm back providing more valuable information about health insurance and hopefully helping you navigate what tends to be a super complex type of industry, overly complex, if you ask me, especially for the consumers that want to understand it and want to know that they're getting good health insurance. You know, a really common question I get is, "Hey, Steve, I'm pretty healthy. I don't see the doctor very often. Is there some way that I can lower my health insurance costs because I'm not needing to see the doctor as often?" And I love answering this question because there's so many different ways. Um, if you are young and healthy and don't have any concerns with any kind of conditions or any kind of history in your family where you might get that dreaded diagnosis, some people will move towards a catastrophic plan, meaning they'll just cash pay for the cold and the sniffles that they get occasionally and maybe for the annual preventative, but then they want coverage for like the worst thing that could happen, like a terrible accident or a just a catastrophic type of diagnosis that could really put them in a financial bind if they weren't in a situation with insurance to be able to cover it. The other way, and a lot of people do this, is they purchase the highest deductible plan on the marketplace. Now, when you move the deductible up, and typically with it, the out of pocket max that I talked about a few episodes ago, you're putting more of the burden for your healthcare cost onto you, and therefore you're able to lower the premiums. So a lot of people do that. But the problem with those plans are you're functionally uninsured because if you get a high deductible plan or an out of pocket max that exceeds 10,000, I've actually seen them exceed 15,000, then you're functionally uninsured for a large chunk of your expenditures. And keep in mind that that all resets at the beginning of the year. And so if your timing for a dreaded diagnosis is later in the year, then you could be spending all of that money and then again spending all of that money once the term expires and the new year starts. So I don't recommend those high deductible, sure, they don't cost very much, but those high deductible plans effectively make you functionally uninsured. Another great option is with underwritten plans. Now, here is what's really fascinating about the healthcare industry. In our country, in the United States, 5% of the population accounts for 50% of the healthcare expenditure. Let that sink in for a minute. 5% accounts for 50% of the expenditures. And so, if that's the case, and it certainly is, they did a study in 2017 that found the expenditures across the US matched that 5% generating 50%. So, what's happening is we have a small minority of very unhealthy people in the country. Now, these individuals, because of the changes in the Affordable Care Act, are able to go into those plans. Well, what did those insurance companies do when those individuals were allowed to get into those plans? Meaning they could no longer deny coverage for folks as long as they were willing and able to pay the premium. Well, they increased the premium, they increased the limits on the deductibles and maximums, putting more of the burden onto the insured. And therefore, if you're relatively healthy, and you don't have to be a super fit athlete, but if you're relatively healthy, these plans can cost you a tremendous amount of money because they're having to cover the cost of that 5% in our population. So underwritten plans are a great alternative. Now, some health insurance agents will tell you that underwritten plans are cheap insurance. And certainly there are some agents out there that are selling on quantity and not quality. And what I mean by that is when you sell a underwritten plan and it's a skinny down version of the benefits, it's not going to cost you very much. But when you get when you have the need for that health insurance, it's going to cost you dearly. So an underwritten plan that's properly structured, and that's the key. An underwritten plan that's properly structured can lower your cost and still provide that kind of catastrophic coverage that you're looking for. Well, let's talk about what is underwritten. All right, so it's a common term, and essentially it means in any kind of industry, whether it be you go in and get you want to purchase a home, your mortgage is going to go through underwriting. If you want to get a loan from the bank, that is probably going to go through underwriting. So the term underwriting is just a broad term used across a lot of different industries where someone is going to look at your situation and potentially your history and decide, can they offer that product or service to you. In the health insurance world, the underwriting process actually looks at your medical history. And a lot of people don't know that our medical history is captured in the medical bureau, just like our credit history. And so medical underwriters can go look through your history to know what prescriptions you're taking, what procedures you've had over your life, and can they offer you insurance without increasing their risk as an insurance company. So that underwriting process typically takes about a week to 10 days. But when the decision comes back, then they're able to offer you health insurance. And when you go through an underwritten plan, they're assuring that you're a pretty healthy person. Now, like I said, you don't have to be a super fit athlete, but they're not going to cover you for, say, chronic conditions. Like a type 2 diabetic won't be a good fit for an underwritten plan. Recent cancers may not be a good fit for the plan either. You need to talk to your health insurance agent and find out, but they should be able to pre-qualify you and make sure that they don't waste your time nor theirs going through the application process if you're not a good fit. So, how do these underwritten plans lower your cost? Well, when they're properly structured and because they're underwritten, the insurance company is lowering its costs and they're passing those savings on to you in terms of lower premiums. And then the other thing is when they're properly structured, they can be providing a benefit to you that can exceed the cost of care. And these benefits that exceed the cost of care get paid directly to you. This can offset some of your premium costs throughout the year. And keep in mind, it needs to be properly structured with catastrophic coverage, if that's what you desire, or a dreaded disease diagnosis coverage would certainly be beneficial. You know, the worst thing you want to do is get into your life and get older in your life and then get that dreaded diagnosis, a cancer, or have a heart attack or a stroke, and not have the additional coverage that you wish you to put in place. So, absolutely. Can you lower your health insurance cost if you're somewhat healthy? Yes. You don't need to be super fit. You just can't be in that 5% of the population that I talked about. So, in the video that I talk about at the end of my videos today, is explaining a little bit more about this concept in the industry and why it's rigged against you. So, I hope you take advantage and go listen to the free video. Just go to insuremesteve.us/rigged and you'll learn how the healthcare industry is rigged against you, but how you can change the game in your favor. Hey, put a comment down below. Put your questions down below. I would love to hear from you, and I will reply when I see those. So, really looking forward to seeing what your thoughts are on this video and giving me feedback as well. Feedback makes this better. So, appreciate any type of feedback that you can give me. I hope you have a great day.